you're here because you're probably like me. I remember when I first started trading, it seemed so hard to learn how the market works and how to use common technical indicators to understand price action and market structure. You spend days and nights staring at the market trying to understand it, pulling out your hair in frustration every time you enter a trade, and then the market immediately reverses and stops you out. Well, this video is for you, to help you understand how the market works. To do that, we need to understand the math behind the market, the gearwork that makes it tick, and how to read that through the use of indicators. Indicators specifically designed to peel back the mystery of the market and help us understand what market makers and algos are doing to manipulate price to target you and stop out your trades. Make sure to watch through to the end to fully understand everything we learn from backtesting these indicators using real market data to better defend yourself from the hedge fund market makers and high frequency algo traders after your capital. In this video, we're going to look at a 1-minute scalping strategy. It utilizes several common free indicators so anyone can test it out and see for themselves how it works. This strategy uses 2 Bollinger Bands and the heikin ashi candlesticks, as well as the Fibonacci retracements. Fibonacci is a special numerical sequence developed by a mathematician of the same namesake way back in the day, and it's been used for countless things between architecture and physics, understanding nature, and just the way the universe works in general. So we're going to apply it today to the market to see if it can teach us anything that can help us become better traders and investors. So let's begin. The way this works is you're going to use 2 Bollinger Bands, a very long-term one set at 100 length with a 1 standard deviation, and a short-term one with a 20 length set at a 1 standard deviation. And we're also going to use heikin ashi candlesticks to better show trend as it progresses. So we actually have 3 bands. We have 1 band, we have 2 bands, and we have 3 bands that operate in a staggered pattern. And we're going to use the Fibonacci retracements to better understand price levels inside of these bands and across trend over time. So the way this works is, let's look at a short trade. Start here when it starts to pierce out of the fat slow band, indicating that trend could be changing. We're going to draw a Fibonacci retracement from the point it pierced to back to the last high, and that's going to give us our levels. And from here we can wait for it to retrace or enter here, or just add. For this back test, we're going to start right here, because you can't mess that up. So we're going to buy here, short here actually, we're going to short here, and we're going to put a stop at the top of the fib retracement or the top of the band, whichever one makes more sense to you at the time. And we're going to drag our target down to either the red or the blue. For this test, we're going to use the blue because it's going to have a higher hit rate and, I believe, better results. And there's your short trade. Now let's look at a long trade. In much the same way, you wait for price to pierce the fat band. Take your Fibonacci retracement, take it from the pierce down to the last low or high, respective. And then what you're going to do is you're going to take a position, we're going to take a position, and we're going to put a stop at the bottom of the band or the last low, whichever one makes most sense. Right now this one pierced it on the last low, so I don't want to do it again because the equal low it would stop me out, so I'm going to go to the bottom. And then we're going to take a shot at the blue. And you can see this trade also was successful, and that is a long trade. We're going to do a 100 trade back test to see how this performs using real market data to help us understand more about the market and make us better traders and investors. So I'm going to get right to that, and I'll see you guys on the other side with the results. Hey guys, I'm back with the results, and it was a fantastic back test, as I hope you all saw. There was a lot of nuance in there that if you didn't get to catch, I suggest you go back and watch, because there was a lot of trades that kind of set up funky and were hard to kind of call. So if you want to try to mimic this yourself and understand this test, run it yourself, understand more about the marketplace, then I suggest before you do that, you go ahead and make sure you watch that montage to get a total grip and handle around everything we cover. So, the test, it lasted 22 days or 8,581 minute bars. We had a simulation account with $1,000 in it. We took 100 trades. 65 of those trades were winners, 35 of those trades were losers. That gives us a 65% win rate. We had a total P&L of $347 on that $1,000 for an average trade win of $3.47 per trade. That results in a return on capital of 34.70%. For an annualized leveraged return of 2,134.80%. Your average win was $8.86. Your average loss was $6.54 for a return to risk ratio of 1.355. You can see that it had very steady climbing, where the average loss and the average win were close, with the average win being higher, and then you had a better than 50-50 hit rate. So you get to see this nice stair-stepping chart. In conclusion, this performed better than I expected, and it can teach us a lot about the market, as well as how participants think using Fibonacci, whether they plan to or not. I hope everyone enjoyed the video. Thanks for watching. If you enjoyed this, you'll enjoy my other ones, so make sure you check those out too, and subscribe to the channel. If you're going to replicate this test, make sure to replicate it on your own tickers and time frames to make sure it's best suited for your style. And as always, I hope you have a great night.